kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting, and I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations, and of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
All right, welcome everybody. Let's get started. We have a couple of really cool deals that we want to share with you. Maybe share some stories through the case studies. And if you have any questions, we can then go over that. There we go. Now we got the sound effect going right. Okay, let's get started. So let me introduce our host organization, Real Estate IQ. One of our flagship product is on the distressed off-market motivate sellers, right? This is where you can get the freshest information of distressed sellers. Then we can start doing marketing on these sellers. what I have personally found a lot of success, and a lot of our clients too, is the pre-foreclosures and the appointment of substitute trustee. These are the folks that are kind of facing foreclosure. They are extremely distressed, and they are very motivated to respond back. And we find a lot of traction on those, and probably something that you should consider trying out on if you're actively looking for deals. Of course, we offer a couple of additional solutions. For the folks that are actively looking for deals to purchase, we also have a couple of deals that are under contract now, and we were able to put it under contract for a pretty attractive discount, and we'll be sharing some of that in a bit too. Okay, all new Real Estate IQ website where you can get distressed seller leads, deals, classes like this. Right now we are watching our live stream. We also have 4 classes that are kind of fundamental deal finding type of classes. We'll be adding additional classes over time also, but kind of the idea here is to share the knowledge and the education that we need to start finding deals on our own. And then, obviously that's not the end of it, right? That's just the beginning. We have to talk to the seller, put it under contract, and then also monetizing on the contract, right? Whether we wholesale it or we keep the property. And then we also have real estate investment related news, which I'll be sharing some of the new updates we have for this week. And so that's coming up as well. If you miss our weekly live stream, you can get a glimpse of that on the website. You kind of see the slide that we will be presenting today, and then obviously if you're on our email list, you also receive a recap email with some of the highlights that we have for today. Okay, some successful clients. If you have attended our live stream before, I'm not gonna elaborate too much on this, but kind of some highlight here is this person, Salvador. Salvador as a client has got his first deal making $30,000, right? It's not typical, and it's also not atypical. So it really depends on the deal. Some deals you make 5,000. Some deals if you don't do it right, maybe it could be a net loss too. But some deals you do very well. Just like Jordan first deal, he got 55K, and the second deal, only 5K. But 5K is also good, right? 5K is a good profit. And then if you have consistency, like Ismail, he has been doing this for many years. He has found a lot of success in his business. And it's about consistency, right? Consistency in execution, in working the leads, in doing outreach, and in follow-up of the leads. Then now we're talking about a set number of transactions that we can expect on a monthly basis. And on average, he's doing about 8,000 per deal. Okay, Homero. Even bigger success. First 6 months, he made 100,000. So all the disclaimer that I want to share is that success cases and all that, it's case by case only. You should certainly always do your due diligence, including the deals that we'll be sharing today on all the numbers, right? After repair value, rental value, you gotta always do your due diligence before you proceed with any transaction. And we don't offer investment, financial, or legal advice. And if you have a lead and you need help with closing it or working it, we can help you with that. We can walk you through every step of the way to get all the way to closing. I want to highly encourage you to take advantage of this resource that we have. I just had a meeting with David, one of our potential clients, is that kind of talking about being able to kind of help you with the leads. certainly you can use Real Estate IQ leads, but if you have other leads, there's a lot of kind of what do they call it? Pocket leads. Maybe it's a neighbor that that really need to sell, very, very motivated, distressed situation, and they're willing to accept a deal structure, right? Either if it's a cash deal, it needs to be heavily discounted, or if it's a deal that can be done with a subject to transaction. Either way, depending on the lead and the seller, and what's their situation, what do they need, we'll structure the right offer to help them. Okay, so we can help with that. So today's agenda, we just finished with our introduction. We're gonna spend 5 minutes on market updates. Probably maybe spend a little more time on the case study, some of the deals we got under contract. And for our feature topic, we're gonna have Q&A. I think I was just having this conversation where I think a lot of good content is hard to prepare for it because it may not be the right information that you need. So if you have questions, I think that's actually where we can pull the right information that you need today to work on your deals. And so we're gonna open the floor for your questions. You can ask your questions on the chat, and then we'll share with you some upcoming events and how you can attend those as well. All right, so quick market updates. Number one is we're seeing a rising number of foreclosures. We're talking about growing of Americans seeking legal help on foreclosures and bankruptcies. In fact, we track our foreclosure data and how many foreclosure filings are being filed on a regular basis. We are certainly looking numbers on a weekly basis internally, and we're seeing an increase in the numbers of filings. And I think this trend is going to continue with the war going on, gas going up, everything else going up. It's going to create more hardship for those that are kind of just hanging on, and so we're going to see more delinquency in payments coming up, and likely more foreclosures. So some of the common questions is, what we're going to do if we're flipping properties, is it going to affect the material cost and the labor cost? I think the short answer is yes. The question is like when are we going to see that? And Tamla, who regularly joins our live stream, she's getting quotes all the time. So I think she's gonna have more insight on how it looks. But again, if we continue to have that 70%, right, purchase rule of thumb, if we follow that, and if we're wholesaling, we overestimate the repair a little more, right? We underestimate the ARV and overestimate the repair a little bit, then I think our numbers will still be conservative enough to make the numbers work. Okay, next. So foreclosure rate stays elevated. We saw some numbers under 6% briefly this year, but now it is now hovering around 6.5%. We're seeing 15-year fixed mortgage still a little bit under 5%. So if you see a sub-2 opportunity that is under 6%, that would be a potentially good opportunity. Of course, if it's higher than 6%, we can still structure a deal to make it work too. So don't shy away from the higher mortgage rates for a sub-2 deal. I think you can still find buyers that kind of need that funding, and they don't mind paying a little bit higher interest rate. As long as the numbers work, a higher interest rate still would work. So smart buyers are focusing on more creative financing and long-term strategies such as sub-2 and wrapping. And I think as long as, again, we kind of cover our bases, and it really doesn't matter what the number is. There are many creative ways we can make a deal work. I think one of the ideas in terms of training, a training class we have, is what are some of the creative ideas we can do to restructure an existing mortgage note to make it more palatable, and it's easier to exit. It's easier to dispo and find a buyer, and so we can go over that in a dedicated training. Number 3, potential Fed rate cuts could boost housing. So there's growing expectation now that the Federal Reserve will cut interest rates soon, and that's gonna kind of revive the housing demand and improve on affordability. We'll see where that happens and how that counteracts with the inflation that we're expecting. I think the high gas price is just the beginning. We were talking about, I think there were talks of opening up the strait, and that is no longer going to happen for the time being. And so we'll continue to see elevated oil and gas prices, and that's going to continue to drive price up too. So kind of brace for that. And the consensus is if we only have one source of income, and it's more of a stable income, right? Let's say we have one W-2 income. Inflation and rampant inflation can really, really hurt us and our quality of living. And so it really makes sense, especially if you don't have multiple streams of income yet, is to kind of start looking at real estate as a potential way to, number 1, hedge against inflation, and number 2 is to bring you an additional source of income, so that when prices go up, if you own your own business, you can always either charge more fees or do something that can hedge against that. Okay. All right. Next segment, we have the deals update, and today we're overloading you with the deals. Okay, we got some deals that are under contract by our partners, and some that we know more of a story about. So we'll talk about each one of these. Okay, if you have any questions on how we look at the deals, or specific questions on the deals themselves, also feel free to ask. So a quick disclaimer. Okay, we're not acting as brokers. Always do your due diligence, right? And you should always, I guess, look at all the numbers. Right? Don't take the numbers that are on the screen as gospel. But obviously, we try to make it so that it's a deal that we want to get into as well, and we may end up keeping some of these deals. Okay, so this deal is in Elgin. This is a seller who is in a pre-foreclosure situation. Her house had AC leaks, and then over time, the moisture created a fungi situation on the inner walls of the house. And that created a situation that she doesn't want to live in, right? She has since vacated the property, and but she had trouble kind of finding the right buyer who would take on this property. So in one of the outreach, we talked, and I thought the property, there were certain things that need to be done, and I actually drove and saw the property and kind of saw that okay, the repair is not as bad as it sounds. And so we actually got pretty firm quotes now. The estimated repair is going to be under 15,000. And if you kind of look at it, right, the entrance of this property, and in another section, I guess in another opportunity, I'll share with you kind of how we structure the deal. And we kind of share that in our previous live streams, how we end up structuring the deal and kind of the full stories behind this. But, kind of the way we're structuring this deal now for a buyer is that the entrance is 30K, right? Earnest money 5,000. And if you look at the after repair value, it's about 300. So there's a pretty big margin because the mortgage is 148. You can take that over while you fix the rehab, right? So you're coming in around 30K plus 15K, and then you can exit. And in this case, number one, it's a good deal because you see everything going in. You're gonna end up with a 37% discount on this deal. And then number two is that the financing is already in place. So typically we do a 30%, right? 70-30. We do the 70% rule with 30% of the margin, part of that going into financing cost. So with the financing already in place, you don't need to worry about that anymore. So this is a really good deal for anybody that are looking for kind of quick cosmetic fix in this area. All right, it's in Elgin, which is about 20 minutes from Austin. Okay, this is a deal in Huntsville. We got some questions as well. We'll field those in a little bit. This is in Huntsville, which is, I think, less than an hour north of Houston. And this is a family home for the seller. She actually grew up there, and they just had a renter moving out, and so the place is vacant. And kind of at this point, they have built up quite a bit of equity on the house, and so they were okay with kind of accepting a discounted price because there's also more work to be done in the house. So you kind of need to clean this up. In general, it's in good shape. There is some roof repair that you have to work on this property. But there's no roof leaks, for example, and it has good bones, right? And the local rent in the area, and these are mobile homes in the area, are pricing at around 900 to 1,000 a month. So there's obviously opportunity to earn a higher rental than that. So we're being conservative in the rental numbers here. And so kind of if you add everything up, this is a 67 cents to the dollar deal. And we always say, always do your own due diligence and forgive our typo on always. Okay, this would be an interesting rental home. And if you want to flip it, that's also an opportunity. Ed was asking, how did you take over the mortgage? It's called a subject to transaction. And that allows us to take over the mortgage payment as part of the transaction. For details, we will we'll need to kind of go over that in a more dedicated training. Okay, it's called subject to. You can look that up. Okay, and then this one, we just got it under contract, I think over the weekend. A cash deal as well. Now, what's interesting about this property is that it has 4 lots. It comes with 4 lots. The house itself is on top of 2 lots, and then there are 2 additional lots adjacent to it, west of it, in fact, that you can use potentially for builds. And what's interesting is that there are new data center that are planned in the area. So the area is expecting some new developments and new population growth. And the house is also rent ready. So very low estimated repair. And the house is appraised for 160K. So you can add all the numbers, all in. about 69%, which is still right. It's good because it's a under 70% ARV. So all three are very interesting deals. Dale asks, how do you know how to find out what's wrong with the house before talking to the seller? How do you figure out the estimated repair? Yeah, okay. There are a couple of ways that we can do that. Number one is asking for current photos of the property. And based on the photos, we can come up with a quick estimate. Another thing that we would do is we want to look at the comps in the area and see what the after repair value is, number one. And then also, what's the condition of the comps that are being used, right? All the houses that are sold in the area, what's the condition? So based on the difference between the two conditions, we can then estimate the repair. And depending on where you are, the numbers may be a little bit different, but typically we try to overestimate the repair a little bit, and we have a particular price per square footage that we can put in kind of rehabbing the property to come up with an initial estimated rehab. Okay, so for wholesale, that's what we would do. There are kind of three grades, right? There is the rent ready. It's a lower price per square footage to bring it up to speed. There is the mid grade, and then there's high end. So high end, could be all the way to $50 to $60 per square feet. And then rent ready, I think we're estimating about $20 per square feet. And then mid-range about $30. So at least, it's not gonna be super precise, but at least it kind of gives you a little bit of guideline to get started and give that initial offer. And then this is not something everybody does, but I do, is that when I put it under contract, I make it a point to go visit the property, or we can send like a inspector that we know very well, who know how to work with investors. Either that, or have a general contractor walk the house and really kind of give a more detailed estimate, and that would give us a much better idea of what the real rehab is, and that's what we do too. So part of that is after we put it under contract, those are kind of part of the workflow that we want to do to refine that due diligence. Because let's say we put it under contract and we found, oh man, there's a big foundation problem that the seller hasn't disclosed. Well, that's going to affect what the repair is going to cost, and we may need to renegotiate the number. Okay, I hope that answers your question in many words. Thank you for the question. All right, and now this house is it's either a tax foreclosed property or bank foreclosed. It went into foreclosure, and then it got purchased by our partners. So what's interesting about this house, these are usually the houses I have found that need more repair. Okay. So you certainly want to walk the property and estimate your repair for the next three houses. And this house, what's interesting is that it is 18 minutes walking to the water park, a very famous water park in New Braunfels. It's only 3 minutes drive to that water park. And if you have been to Shiliaban, really awesome place. Like I wish I'm back this year. I may try to go back this year. And the water park itself has a lodging, and those are quite expensive. So there's opportunity here to kind of turn this into a short-term rental for the people that are going to the water park. So asking price ARV is the kind of estimates that are found online. So you always want to do your due diligence on this. Okay, so that's New Braunfels. This is a house in San Antonio. Okay, it's very close to the major highways and medical center. It could be a short-term rental. It could be a potentially a flip as well. Okay, so when you make an offer, you want to really make sure that you offer at a price that that makes sense for you. You know, we always recommend the 70% rule when you make the offer. Okay, this is another house in San Antonio. Okay, the asking is $139,000, and then this one has a little more outdoor space than the lots in the area. And then there's, you know, as you can see, there's quite a bit of kind of empty space, and there's no HOA. So very interesting. Okay, so for those of you that are interested in learning more about these properties, you can scan the QR code and fill out the form. Make sure you specify which deal you're interested in, and hopefully, I'm hoping that you had a chance to take a screenshot in the deals that you want to look further into, and then we can send you more information if you're interested. Now we have more deals also that we market for our community. And so if you have any kind of deals that, you know, either on this list that are potentially a good deal for you, or if you want to get on our list for future deals, you want to make sure you scan the QR code and get on our deals program, so you can be the first to know when a deal becomes available. Speaking of deals, we have our Deal Accelerator program. It's on wait list now. We'll be opening up to a new cohort in a few months. And what we're seeing is, you know, a gap that we see is, let's say we have gone through a lot of trainings on deal making, right, on how to invest in real estate. But when it comes to actually getting the deals, there's still a lot of hesitation and questions. You know, I personally find that I have questioned every single step of the way. Like, how do you fill out a contract? How do you fill out a different part of the contract? I had so many questions myself. So this is why we are creating, and we have launched the Deal Accelerator program. It's really for the folks that are looking for practical ways to get deals and do deals, right? To really get the deals done. So, you know, how we're doing this is, well, number one is you need the leads. You need a high quality list to get started. That's the beginning point of anything. You can skip the leads and buy a deal. That's what the deal program is about. But you need a solid number. You get a solid set of leads or a solid deal to get into it. And so if you choose to work the leads, you know, then the first bullet point is what we need, right? We gotta know how to find the deals. We gotta analyze the deal so we can do underwriting. And then how do we structure the deal? So that's the deal making training, and the whole logistics, right? The process and the workflow of what it takes to get a deal under contract is what this Deal Accelerator program is all about. And then let's say you want to keep the property and you may not have all the funding to buy it. In fact, there are thoughts that joining a funding program or leveraging someone else's money is a good way to get a high cash on cash return. And we agree with that. We actually also do that as well. We leverage funding to do the deals. So what you can do is you can scan this QR code and learn more about it. Okay, subtraction. All right. Let's see. So we're about halfway mark on our hour. I think what we can do, actually, maybe we can invite everybody to go to this website, dealsnearme.io. And this is our a new app that we have developed and it's still in alpha mode, which means, right, it's still in the kind of feedback process, but you can certainly use the app now to look at the distressed sellers. You might be curious, some of the houses that are facing foreclosure, what does it look like? Well, with this app, you can actually navigate to the property itself and take a look at it if you like. And we kind of created and designed this app in such a way that you can drive there and do door knocking if that's a preferred marketing method of yours. But we certainly want to work with you in continue to refine this app. Okay, so we're just in the beginning of this app here. Okay, so let me bring this app over here. Okay, so you can see that the app already kind of map to where you're located at. And so first of all, first thing you need to do is to sign up for a trial account so you can play with it. And you can see that there are different colors based on the amount of equity that's in the deal. And these are estimated equities. Like, we don't really know what equity, how much real equity it has. Maybe the house owes more money than we estimated. When we came up with the equity, we were estimating that the seller has been consistently paying down the mortgage for, from kind of when they first originally got the loan to today. And maybe that's not necessarily the case, right? With the COVID, there were forbearance being filed, there were more liens that got put on the house. So the equity is just a guidance. If you want to work properties that have high equity, you certainly want to focus on the green ones. If you are interested in sub 2, right, buying houses sub 2 and take over the mortgage payments, then you probably want to look for the orange and red color-coded ones. Okay, and then so let's say I'm interested in looking at this particular property. You can zoom in and kind of see where the house is. So let's look at what this one is. So here we have the address, right, the equity and stuff. I can go to details and see some numbers. You can also use the deal calculator to figure out what the exit strategy looks like. Certainly worth playing around. If you want to skip trace, right, get their information, you can also purchase the skip trace. Cool. You can go back and let's say we go back to the same property. Okay, maybe not the same property now, but you can navigate. And it's already kind of connected. So you can just try to drive to these properties in your neighborhood and see what these deals look like. And maybe, say for this one, it was, if it did get auctioned off back in October, maybe there's already being flipped. Maybe it's in the middle of a construction. So you can use this app in very creative ways to do whatever you need in your investment business, whatever you need today. Right? You can add these to favorites. Actually, I would do that. Put this in favorite. So you get the deals in your favorite. If you're a pro account, you can also add it to your pipeline. This is the auction calendar, where you can see on any particular day what counties are having their foreclosures. Okay, you can look at the analytics numbers. You can track your activities, etc., etc. So I don't want to spend too much time on this app, but want to encourage you to sign up for a trial account and play around with it. I think you'll find really good uses for this app. Okay, so next we have more. We'll open the floor up basically for Q&A. So if you have any questions on the deals that we shared, normally we would share a lead, how we underwrite the deal, and come up with an offer. We don't have one today. This week, I think, because it's an auction week, we are not seeing a lot of leads that are as responsive. That's kind of, every month seems to have that kind of high and then, a little bit of a dip. But next week we should have one for you. Okay, so anybody have a deal or that you have questions on, or anything that we talked about, during market update or the case studies? This is time to ask. I don't see any more questions, so you can certainly privately email me, and or you can send a if you send me an email, I can answer your questions in our future live stream, and obviously I can answer your question in person as well, one-on-one. Speaking of answering questions, these are upcoming events, right? So tomorrow at 9:30 we have the office hours. This is where you can join and ask specific questions. So like kind of what we have today at this session is a little more of a presentation, right? Kind of sharing the updates, discussing some impacts, maybe sharing some pre-planned topic. But then, and maybe if we have time, we can answer some questions. But the office hour is going to be a little more intimate setting. If you have deals that you have questions on, or leads you have question on, we can work on that together. And just an extension of the discussion for today's session as well. And then there's also the Friday open house. Learn about how you can get involved with Real Estate IQ and how kind of the big picture of what we're looking at and the opportunities we see. And then from an educational standpoint, these are the classes. It's usually at 6 o'clock, Wednesday, Thursday, Friday. Tonight, for example, there's a pre-foreclosure, how you can work the deals. And then Saturday morning, we also have a class. Dale has a question. The homes that you showed, do you have investors that you use to sell the property? I'm guessing you're asking for a potential investor buyer for the property, and that's where the Real Estate IQ community is. I'm in the middle of kind of building that. The kind of generally accepted thought is that for any market, you don't need a lot of buyers. You don't need a big buyers list. You just need to have a set number, like a good number of solid buyers, right? The people that are consistently buying. Maybe you need 5 to 10 for each market. So a couple of thoughts is that you can look for cash buyers in the area. You can go on the MLS and see, look at houses that have recently been flipped and who the owner was before it was flipped. And then you can also kind of leverage investor groups or communities like us. Say you have a deal under contract and you want to get a buyer, we can help you do the marketing and find a buyer too. I hope that answers your question. So it's either data mining, or it's either data mining, or you know someone who knows someone. Okay, so if you're interested in learning more about the off-market distressed seller data, you can talk to our consultants, scan this QR code, you can get started. And if you have more questions, you can either ask it here. I can extend this session a little bit longer for you. Want to continue to encourage your questions. And you can also bring your questions to the office hours tomorrow. Okay. All right. So that's all we have for you today. Thanks for joining. We'll see you next week. And I want to always encourage you to take action. You know, I think there comes a time where we know enough, but we haven't done enough. And, you know, kind of the next breakthrough is taking the action and going through trial and error, failing and ultimately succeeding. And so that's what we can, that's the support we can offer you. All right. Thanks, everybody. Have a great rest of this weekend. And for those of you that plans on joining us tomorrow, we'll see you tomorrow.